Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Rivian has gotten a lot of attention for its investment in electric vehicles and the ramp that it's having producing vehicles, but one company is actually ramping their production even faster, and that's General Motors. This might be a surprising development. To you, but General Motors is going to produce as much as 3 times as many electric vehicles as Rivian in 2023. They're actually growing their production even more quickly than Rivian. If there's any company that Rivian investors need to watch closely, it's GM, because this is a company that is dominant in trucks and SUVs. And once they start moving into that piece of the EV market, Rivian could be in trouble. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content. And don't forget to turn on those notifications. So I want to look at the first quarter numbers because I think these are really telling for both companies. This is the production and delivery release that Rivian put out in early April. So this is exactly what they're producing. 9,400 vehicles in the first quarter of 2023, delivered about 8,000 of those. What can we tell about the ramp of production? Well, they're still saying that annual production is going to be about 50,000 units in 2023. 50,000 is a quarterly production of 12,500 units. So that means that they're going to ramp up production to maybe 15,000 or so units by the end of the year per quarter. That's around what we should expect, 15 to maybe 20,000 units on a quarterly basis. Now, this is in comparison to what General Motors just released. They just put out their numbers and they gave production numbers for their entire fleet. But I want to focus on the EV side here. Over 20,000 electric vehicles were produced in the first quarter of 2023. So that means that GM is already producing more vehicles than Rivian expects to produce by the end of this year. But it's not going to stop there. The statements that came out from General Motors after this release was put out said they're going to produce 50,000 electric vehicles in the first half. So that implies about 30,000 units of production in the second quarter. And then in the second half of this year, they're expecting to produce about 100,000 electric vehicles. This is what they're calling a breakout year for EVs. Here's that 50,000 vehicles through June and double that in the second half of 2023. The vehicles that we should be looking at, Cadillac Lyriq is already starting to deliver, the Hummer EV, and then the Chevy Bolt and Bolt EUV, production of 70,000 units to meet global demand. So that's going to be a big ramp in that vehicle. That's one of the smaller vehicles, but then we're going to see new vehicles like an electric Equinox and a number of other models coming over the next year or two. The other one that the company seems to be really excited about is Bright Drop. That's an electric van. And then, of course, we have a Silverado EV work truck, orders from more than 340 fleet customers. So that could be another one, and deliveries are expected to begin in late spring. So that's really the one vehicle that investors in Rivian want to watch is what does that Silverado EV look like? Because the electric Ford F-150 has really been successful. They've been selling that out, and that's in really high demand. So is that something that's going to put competitive pressure on Rivian? I think that really could be the case. But the real takeaway here is that General Motors is a much bigger electric vehicle manufacturer than you might think. And given the fact that the company already has this scale of production, it has a long history of producing vehicles at scale, it's not dealing with some of the same problems that Rivian is trying to ramp up that production. It's actually already there. It's at least 3 quarters ahead of where Rivian is. And I think the upside is even higher because given the pace that GM is expecting to be in the second half of this year, that would basically be full capacity for Rivian's Normal, Illinois facility. So we're still a few years away from their Georgia facility being operational. That means GM is going to be a bigger electric vehicle producer than Rivian for the foreseeable future. And I don't see that changing anytime soon. That's a really interesting competitive dynamic and kind of puts Rivian on the back foot right now. So something to absolutely keep an eye on. Both of these companies are going to be releasing their quarterly numbers. I will keep an eye on those here on Rive Investing. The other thing I'm going to watch with Rivian is their cash burn level. That's something that absolutely is a concern for a company that's trying to ramp up production because cash is going to run out at some point if they're not able to produce enough vehicles. But if you're interested in electric vehicles, you may actually want to look at General Motors. It's a bigger player than you might think. I actually own both of these stocks, but GM is one that I'm very bullish on, in part because of its transition to electric vehicles. But I'd love to hear what you think about both Rivian and GM. Leave a comment in the comment section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody, and I'll see you here next time.